Okay, guys, we're learning some things. I'm learning some things. That video I put up yesterday, I'll link it. I think it goes right here. I'll link it right here. Why I don't think that we're gonna see the short squeeze February, March. A lot of you didn't like it, like a fucking lot of you. I can see the analytics. That video, comments weren't too bad. There wasn't a lot of hate in the comments, but the likes were not very high. In fact, more of you disliked the video than liked it, which is fine. It has nothing to do with that. I'm not trying to give you the wrong impression here. It has nothing to do with likes and views and subs, any of that. I don't give a shit about that. That's not what I'm getting at. Because the only thing I care about at the end of the day is, obviously I want this to squeeze badly. I want to move on with my life. But I don't know what the mission here is. I don't really know what I'm doing with this YouTube stuff as far as my I don't have a strategy, right? There is no plan. I just want to hopefully contribute some positivity to this community and something constructive to it, because, and at the end of the day, like I keep saying, I just got tired of getting censored and deleted in comments on other people's channels, so I just said, fuck it. I turned the camera around and put myself on it. Like I said, I just hopefully want to contribute something positive, not trying to spread FUD, and that was not the intention with that video. Obviously, that's going to be how it's perceived, because, again, a lot of you didn't like it. And I understand why you didn't like it, because it's probably not what you want to hear. You want to hear that this is going to squeeze February and March. Your confirmation bias wants that badly. So I get it. It's totally fucking cool. The other thing I'd like to do, hopefully, is leave this community better than when I found it as well. Like, you know, that's all. That's really the only, I guess, goal here, if there is even a goal with this channel. So that being said, let's get into it. Okay, let's provide something. Let's provide something constructive. Let's provide something actionable. Like, I like Lou. You know, I mostly like Lou. Mostly like his videos. I don't watch a lot of them, but excuse me. I just find sometimes he just kind of, I don't want to say abstract, but he talks about these ideas and in a bit of a abstract kind of vague way, and I get what he's saying because I have a pretty strong understanding on how the markets work, so I understand mostly what he's saying, but it's still pretty vague. Like, there's nothing really actionable, like key takeaways that you can, like, turn off the video and go do. So I would like to change that. I want to give you guys something actionable, which we're going to do in this video. So whether this thing squeezes February, March or not, these are things that you can and should be doing, because let's say it does squeeze February, March. Well, there's going to be a life after this. You're going to hopefully have a decent amount of money. Some of you are, as you claim, are going to have generational type wealth. Like, you know, your kids are going to be set up for life. Even if you're in that boat, if you're in that camp, if you of having tens of millions and deca millions of dollars, I think to walk away from investing completely is not the wisest move, because you want your money to last, right? Doesn't matter how much money you have. If you keep spending it, and especially if you spend it at an accelerated rate, you will run out of money eventually. So where investing comes in is it's a store of wealth, right? I think you hear gold referred to as that a lot, a store of wealth. So that's what investing is, right? It's a store of wealth that allows you to, you know, keep the principal, hopefully earn some interest, whether it's dividends or whatever, on that principal. And in fact, that's the smartest thing you can do. I wasn't planning on talking about this actually, but that is the smartest thing you can do, is live off the interest. Never spend the principal, live off the interest. So if you have like 10 million bucks, you throw it into a fund that pays you 4 or 5% a year, and you just live off that interest. If you can't live off, you know, what is that? Let's use 5%. So 5% on $1 million would be $50,000. 5% on 10 million would be $500,000. If you can't live off 500 grand a year, because I bet most of you watching this video are not earning 500K a year right now. If you can't live off 500K a year, then something's wrong. Just imagine that. You have 10 million in the bank, untouched, and you got 500K spitting out every year. Hopefully my math should be right. So I think whether this thing squeezes or not, there's going to be a life after this, and I think investing needs to be a part of your life post AMC squeeze. And in order to, if that's what it's going to be, and if we're going to continue to be investors and evolve and adapt and become better investors, well, then we need to do just that. Oh, there's a car. Yeah, I'm good. I'm good, lady. Yeah. Thank you. I'm good. She thought I was broke down or something. I'm out here in the country about to run some miles, baby. Got an ultra marathon this summer coming up. I got to train for it. So one of the best things that you can do to become a better investor is focusing on the things that are in your control, because at the end of the day, we cannot control what happens to us. We can only control how we react to it. So as an investor, one of those big things is our emotions, our heads. Our heads are our own worst enemies. We think that we're up against hedge funds and Wall Street as investors. And this rule applies to them too. Even the smartest minds in finance, it's their head and their emotions are their own worst enemy. And there's only so many things within our control as investors. So like, the securities we buy, for example, we can control that. When we buy and sell, we can control that. The taxes we pay within a certain degree, we can control that, because we can, we can shelter them with a Roth IRA, and a Roth account, things like that. The fees that we pay to fund managers or funds themselves, we can control that. And the biggest thing within our control, because it's the biggest enemy against investors, is ourselves and our mind and our emotions. So how do we control that? Well, we learn, we educate ourselves, right? So there's a field of study, it's called behavioral economics. I think that is a field that everybody needs to learn and study and read as much as they can on, because the more you know about yourself and your emotions and how you react to things, the better the investor you will be, right? The average, so what is like the last 70 years, average annualized returns. Now there's a difference. Annualized returns, not compound returns, annualized returns. In the S&P 500, I think is like 9, almost 10%. Meanwhile, the average retail investor earns about 4-ish% a year. So they are lagging the benchmark index, arguably, well, not arguably, like, the S&P 500 is the 500 biggest companies in America. The average retail investor is lagging that index by almost about 5% or more, actually 6%. And all of the studying that I've done and the reading I've done, what points to the reason of that is, again, themselves and their emotions and trading too much. They're buying and selling too much and paying in fees because of that. Buying high, selling low, instead of buying low and selling high, all those kinds of things. So focus on the things you can control as an investor. Again, whether this thing squeezes this month, or next year, learn these things, read about these things, become and evolve as a better investor, because there is going to be eventually a life post AMC squeeze, and investing is likely and should be a part of that post life. Like these people that are saying they're just gonna exit the stock market forever because they're gonna have all this money, well, whatever, do you. Like, exit the stock market, that's fine, I get it, there's a lot of fucking corruption, I don't blame you. But you still should be investing in other things, whether it's real estate or private loans or whatever, crypto and whatever the fuck you're into. Like, I just, if you want your money to last, you should be investing in other things. Otherwise, you're gonna run out of it. So, hopefully this message resonates with you. Again, that last video, not at all trying to spread FUD here, guys. Not at all. I want this thing so bad, dude. I want to be wrong so bad. If this thing squeezed February and March, oh my God. Wow, this summer is going to be freaking awesome, because I'm going to get that lake property I have my eyes on. I'm going to get that freaking wake surfing boat. I'm just going to wake surf all summer. Spend the summer at the lake with the family, creating memories, living life, not dealing with this bullshit anymore. Not that it's stressful, but like, it's just getting old. I don't know. Like, I'm tired of it. Aren't you? Anybody else tired of it? Like, I'm not selling. Don't get the wrong idea there. I'm just getting tired of it and just want to walk away from all this so bad and just move on with life and move on to other things. I'm not, not saying other plays, because to be honest, I don't think I'll get involved in all that sundial and other bullshit. If anything, I'll be getting into continuing to build my real estate portfolio and buying some multifamily properties. Getting into the apartment game, like Monopoly. Trading in those little green houses for the big red hotels. Doing some development stuff like that. So I think that'll be cool. All right, guys, what do you think? What do you think? Focus on your emotions. Focus on your mind. That is, like I said, that's the biggest enemy you have as an investor, is your own self, the person you look at in the mirror every morning. Peace, guys.